Let's now start solving question number 3A from our May 2025 examination of CA Intermediate. This question is on Accounting Standard 3 cash flow statement. They've given us balance sheet with notes to accounts, and they've also made some data with regard to our P&L available. So the cash flow statement that they're asking us to make will be in indirect method, not under direct method. Let's anyways read the last line once. See the last line. Further information relating to P&L is given. They've given balance sheet with notes to accounts. Last line of the question, they're saying prepare cash flow statement for the year ended 31st of March 2025. Let's begin. What do we have at the top of the question? We have share capital. Share capital at the beginning of the year is 6 lakh. Share capital at the end of the year is 8 lakh. So during the year, capital has increased. And the capital has increased. It can be because of shares issued for cash. It can be on conversion of debentures or preferences, or it can be for bonus issue also. If this increase in share capital is because the shares have been issued for cash consideration, then it will come as inflow from financing activities. Right now, I don't know. I will go to note number 1. Let's see if the share capital comprises of equity shares or equity shares and preference shares or what. Shall we? Let's go to note number 1. Note number 1, they're stating that equity share capital only, and this was there at the beginning as 6 lakh, closing as 8 lakh. There is no other adjustment with regard to the same. So I'll assume that entire increase is shares issued for cash consideration. I'll not jump into that conclusion right away, but what I would definitely do is in my second, in my preparation of cash flow statement, I'll open one working note. That will be ledger account. In share capital ledger, I'll write on the credit side, opening 6 lakh, closing 8 lakh. Right now, no, there are no adjustment. If in case there was some adjustment, I would have given the impact of the same and then closed my ledger to write it to cash flow. Right now, I'll not write it to cash flow. I'll open the ledger, keep the opening and closing balance here, and then proceed to the next item. Come back to balance sheet. Don't go to notes to accounts. Here I have reserves and surplus. Opening reserves is 50, closing reserves is 80. I would however want to see reserves and surplus notes because there might be more than one reserve in reserves and surplus. See what is there in notes to accounts. There is only one reserve, P&L. How much was opening? 50. How much is closing? So current year profit would have also already been included in this. So we will prepare one ledger called P&L and then right here by balance brought down 50, to balance carried down 80. This should be very instrumental in determining net profit for the year, which is starting point for operational activities. Am I right? Yes. Very good. Then what do we have after that? Come back to the balance sheet. I'm done with equity share capital. I'm done with reserves and surplus. The next item is deferred tax liability. How much is deferred tax liability? 6,000. This is the unique point in this problem. If not for this adjustment, the entire problem was very easy. This is not going to make it difficult, but this is something slightly tricky. You would have to recall the concept that you read from Accounting Standard 22 and also preparation of financial statements. For now, don't worry. Open one ledger, write opening balance 0, closing balance 6,000. In which ledger? Deferred tax liability ledger. Opening balance 0, closing balance 6,000. Sir, why do we write the closing balance on the debit side? Because it's a liability. Liability opening balance credit, closing balance debit. Did everyone understand this? See the next item. Then we have with us trade payables. Trade payables don't have to open ledger. We're doing cash flow statement under indirect method. Under indirect method, changes in working capital is where we write all current assets and liabilities. There also, remember this point, for current assets, we should do opening minus closing. For current liabilities, we should do closing minus opening. Closing balance is 40. Opening balance is 25. Would have to do 40 minus 25. Everyone's clear with this? Okay, let me write 40 minus 25. Trade payables is been taken care of. So come back to my cash flow statement. Under operating activities, would have to start with net profit as per P&L. Then we'd have to do those add or less items which are non-operating or non-cash appearing in P&L. Enough of those items. Then I should do changes in working capital. Here is where I will write trade payables. 40,000 minus 25,000, which is 15. If opening and closing is this way, closing is 40, opening is 25, I wrote 40 minus 25. If closing was 25 and opening was 40, I would have done 25 minus 40 and I would have done minus 15. I hope everyone's clear. Very nice. Come to the next item, short-term provisions. With regard to short-term provisions and dividend payable, don't do current liabilities or current assets type treatment. That is changes in working capital. You specifically learnt in the class that for items which are like short-term provisions, I mean to say our provision for tax, advance tax, proposed dividend, cash and cash equivalent, they should not be treated in changes in working capital. You would have to open separate ledger for provision for tax, separate ledger for proposed dividend. Am I right? Let's take this item into a separate ledger. And this is the ledger in which our deferred tax liability will get adjusted. You remember why will deferred tax liability get created? Try and recall it and also revise AS 22 if you want. I'll teach you that part later at the end of the question. Now 15 and 10. Opening is 10, closing is 15. I'll open one ledger called provision for tax. And in this ledger, I would write by balance brought down 10, to balance carried down 15. Everybody got this? What do we have after provision for tax? Then we have non-current assets, property, plant and equipment. We have 395 as closing, 290 as opening. This might not be just one asset. This might be several assets together. So don't take a decision right now. Please go to notes to accounts. Come to notes to accounts. In notes to accounts, we have building. How much is opening balance of building? 1 lakh. Closing balance of building. That means opening is equal to closing. There is no depreciation. There is no purchase. There is no sale. So ignore building. Ignore, focus on furniture. Furniture, opening is 1 lakh 90, closing is 2 lakh 95. There is increase. There is depreciation during there, but there is increase. So meaning there would be purchase also. Sir, is there sale? Can be. I don't know. How do we get to know? Later in the working note. Sir, are we going to read working note right now? Definitely no. So what would I do? I'll open one beautiful working note for furniture and fixtures. Write opening balance, to balance brought down 1 lakh 90, by balance carried on 2 lakh 95 and wait. After I finish my complete balance sheet and notes to accounts, when I go to adjustments, I'll treat them. The deferred tax also, you don't have to break your head on it. Go by the order. Even without remembering complete concept of deferred tax as per AS 22, you can still close the answer. Knowing it will only make it easier and make you feel more confident. Are you people following what I'm trying to tell? Anyways, let's see. What do we have after furnitures and fixtures? After furniture and fixture, let's go back to our schedule 3 again. Next, we have trade receivables. Trade receivables will not open ledger. Trade receivables is a current asset. We have to take it in changes in working capital. Because it is current asset, we have to do opening minus closing. Come on, let me take you all to my cash flow statement. Under changes in working capital, I will write trade receivables. How much is opening? 10. Closing 20. I'll do 10 minus 20 and write minus 10. Write them as it is. This is the easiest way to do changes in working capital. Current assets, opening minus closing. Current liabilities, closing minus opening. I hope everyone understood. Please see, what do we have after this trade receivables? We have inventory. Inventory also same story. Current assets. We should do opening minus closing. Opening 2 lakh, closing 2 lakh 50. Come back here and write inventory 2 lakh minus 2 lakh 50. Can I say minus 50,000? Very nice. What do we have after inventory? Lastly, we have cash and cash equivalent. Opening cash and cash equivalent 185, closing 2 lakh 76. Anyways, we'll just see that notes to accounts once. What do we have? Nothing. Here also they have not given any information. I would write 185 in my cash flow statement. Opening, closing, I'll not write it there. I'll write it next to it. Why? Later, after I write everything, I'll take the total. It should match to 2 lakh 76. If it matches, the cash flow statement what I'm preparing is correct. If not, there is something wrong. Because they've given the 2 lakh 76 there, even if you get some one item, two item wrong, in the exam when you're solving only, you'll get to know something is wrong. You can make that small adjustments to arrive at the correct answer. Anyways, I understand it will be a moment of pressure where you can't think so calmly. Anyways, let's proceed. What do we have after cash and cash equivalent? That's it. Entire balance sheet is over. Entire notes to account is also over. Now let's focus on adjustments. Shall we? Read the first adjustment. Profit before tax is 45. Very silly mistake that's possible for a student and in the examination is starting your cash flow statement, operating activities with net profit before tax. You tell me, should you start with net profit before tax or net profit after tax? After tax. Even if the question gives net profit before tax, as per the requirements of AS3, when you prepare the format of this cash flow statement, you should start with net profit after tax. Add back the provision which is deducted and deduct the tax that is paid. They have given before tax. So I would not write it here. Here my answer will be net profit after tax only. So I'll prepare one more statement here. This is extended part of our statement of profit or loss. I would have to write net profit before tax. What is given in the question? How much? Very good. From this, I would deduct tax expense for the year. Then I will get net profit after tax. This net profit after tax, what I don't know right now, which I'll find later, will be starting point for CFS. Which activity? Operating activity starting point is this. I would have to find this. I don't know it right now. Sir, how do we get to know tax? Your provision for tax ledger opening closing is there. Two balancing figures there. One, tax expense for year. Two, tax paid during the year. But just giving you a spoiler, deferred tax adjustment is there in this. I'll come back to it later. Sir, ಆಮೇಲೆ ಅಂತಿದ್ರ ಬರ್ತೀನಿ ವೇಟ್ ಮಾಡಿ. Tax expense during the year is 15,000. This includes deferred tax of 6. Tax expense is how much? 15. Here tax expense is 15. This includes current tax and deferred tax. Deferred tax is 6,000. How much will be current tax? 9,000. Sir, what is this current tax, sir? Sir, what is this deferred tax? See, there are two profits. One, profit as per Companies Act, Schedule 3 P&L format. Counting income. On that we compute tax. That will be current tax. Whereas tax expense is the expense that we pay as per income tax. Sorry. Tax expense is the expense as per counting profit. Current tax is the tax that is supposed to be paid on taxable income. Difference will become deferred tax, asset or liability. According to accounts, there is some profit. According to accounts, there is some. On that profit, we've computed tax expense. How much is it? 15,000. But that is not the same profit as per income tax provisions. As per income tax provisions, there is some profit. On that profit, we need to pay tax. How much is the tax we need to pay on that? 9,000. Our expense is 15, but we pay only 9. 6,000, which is our expense as per accounts, which need not be paid. Need not be, or expense not paid will become what? Liability. What liability? Deferred tax liability. I'll pin the link of AS22 revision. If you want, please do that along with this. See, tax on accounting profit is there, no? That, my friends, is 15. Tax on income tax profit is there, no? Taxable profit. That is current tax of 9. Accounting profit mele tax is more. Tax expense is more. Tax payable is less. Tax expense is 15,000. But the tax that will be paid as per income tax is only. So can I say 6,000 is the expense for the year which is not paid? Expense recorded on accounting income but not paid. What will it result in? Deferred tax liability. If you remember, we use this in AS22. Tax expense is equal to current tax plus deferred tax liability. Or tax expense is equal to current tax minus deferred tax asset. If it is deferred tax liability, it should be added to current tax. If it is deferred tax asset, it should be deducted from current tax. So arrive at tax expense. Mathematically proving the equation to you again. 15,000 tax expense is equal to 9,000 current tax plus 6,000 deferred tax liability. Pakka? You don't have to remember this from AS22 at all to solve this AS3. Now, I'll teach you how to solve without knowing this much concept of deferred tax liability. Shall I? Very easy. Come to your deferred tax ledger. Opening 0, closing 6. Deferred tax, advance tax, provision tax. I told everything should be adjusted together. Can it be net off? It has to be net off. Can Allah? Should. Very simple. Close this deferred tax ledger. Shall I write by cash? No. It is not paid. So only it's liability. Am I right? Right here, provision for tax. This is the beauty of opening ledger. In deferred tax liability, I wrote by provision for tax. In provision for tax ledger, write to deferred tax liability 6,000. This is not difficult. I hope you guys understand this is not difficult. They have told in the question that tax expense is 15. How much is tax expense? Tax expense will be by P&L, no? 15. Expense will increase the liability. Current year, tax expense is 15. So, provision has to be increased, no, by 15. Now, identify the balancing figure that will be tax paid during the year. How much do we get? 10 plus 15? 25. 25 and here 21 is there. 4,000 is the tax paid. Did you understand? 15,000 expense, no. You don't have to show this difference here. I've given it so that you get it. 45,000 is the profit before tax. Tax expense is 15. Whether deferred tax asset, deferred tax levy, I don't care. Tax expense is 15. How much is profit after tax? Profit after tax, 30 will be starting point in cash flow statement. 30 will be in my cash flow statement. I'll write net profit as per P&L 30. Now, in this, no, profit before tax is 45. Tax 15. Then we arrived at 30. 15,000 rupees tax is an expense written in P&L. Have we paid 15? Non-cash expense debited to P&L. Add back. Because of that, our profit has decreased. We will add back. What do we add back? Tax expense. Shall I add back tax expense? How much do I add back? 15. And tax paid is how much? We arrive no tax paid here. How much is tax paid? This 4,000 tax paid will be deducted here. Provision for tax created during the year is added back. Tax paid during the year is deducted. That's what we should be doing. Am I right? If in case you had started with 45,000 here, there was no need to add back this 15, but that's not the right method of doing. Cash flow statement will tally, but that's not the right. Tappu pay. I hope you people agree with me. Say something. Nice. So what do we have after this second adjustment? Third one. Depreciation is charged on furniture to the extent of 35. Depreciation is charged on furniture. In furniture account, shall I write credit side by depreciation 35,000. 35,000 is debited to P&L. Is it cash expenditure? No. Non-cash expense debited to P&L. Because of that, profit has gone down. I want to find cash profit. What should I do? Non-cash expense debited to P&L. What should I do? Non-cash expense debited to P&L. Add back depreciation on furniture and fixed assets 35,000. Everyone get it? What do we have after this depreciation? One old furniture item sold for 17 and the profit on such disposal 8,000. 17,000 is selling price, 8,000 is profit. I'll write in furniture and fixture account. Why bank? Why? What is the entry when you sell? Bank account debit to asset. I'll write bank account debit. How much did you sell it for? 17,000. This will be inflow. Why? Cash is coming in. Asset sold. Operating, investing, financing. Is it operating, investing or financing? Investing. Inflow, outflow. Asset is sold. Cash is inflow. So I'll write cash inflow 17,000. Come to cash flow statement. Under investing activities, I'll write sale of furniture 17,000 inflow positive. Everybody got this? Next thing that you have to notice, they've told that this asset is sold at profit. Asset is sold at profit. What is the journal entry for sale of asset at profit? Very simple. Bank account debit to asset to P&L. Am I right? In P&L, it should come on the credit side. In this furniture and fixture account, debit side. What would I write here? To P&L. Profit on sale of asset. How much? 8,000. Am I right? Basically, in furniture account, I should credit furniture by cost. Furniture account should be credited by cost. Selling price is 17. Profit is 8. What is the cost of furniture sold? 9,000. I should have credited 9 alva. So instead I've credited 17 selling price and debited profit, which will come in P&L account as credit. I hope everyone understood this. You want me to write the journal entry and then show the ledger posting? That will become a big mistake at this level of preparation. And this 8,000 profit would have appeared in P&L account credit side. This is non-operating income credited to P&L. Is it operating? This is investing. Non-operating income credited to P&L. When it is credited to P&L, because of this our profit has gone up, no? So I will deduct it. I'll write profit on sale of furniture minus 8. If in case you feel like you've forgotten what to be deducted, what to be added, please do revision of accounting standard 3 cash flow statement without fail. Okay. Then 8,000 minus over. What do we have after this? Yeah, entire problem is over. Full question I have completed reading. What should I do? Close the ledgers that I have opened. Put them to respective activity in cash flow statement. And that's it. CFS will tally. Let's take share capital. How did 6 become 8? Maria Kata. No. Further issue 2 lakh. Cash is received. Sir, can I assume bonus? To assume bonus, reserve should have decreased. No. They have not told. And if bonus issue has happened, they would mention below share capital. Out of the above 8 lakh, 2 lakh was shares issued for non-cash consideration. That's told. That's it. Cash issued for cash. 2 lakh rupees. Operating, investing, financing. Financing. Inflow, outflow. Inflow. When you give shares, you collect cash. If there is a company which will give shares and give cash, you tell me. Today only I will take their shares. How much? Any quantity. I am fine. Sir, what will you do with the shares? I am not worried about the shares. They'll give cash, no? Come on, yeah. When the company issues shares, they collect cash. Or other way, buy bank, no? In bank account debit side, receipt, isn't it? I'm now getting chills in my spine. Why? For the answer that you are giving. Bhaya ಆಗ್ತಾ ಇದೆ. 2 lakh rupees issue of shares for cash. Financing inflow. We're done with share capital. See P&L account. 50 became 80. How? There is profit earned during the year. How much is net profit earned during the year? We did this working note, no? 45, then tax 15, 30. I'll show you the beauty. Have a look at here. 30, 80, 80. Matching. Obviously, it has to. Okay. Then come to deferred tax liability. Already closed. Provision for tax. Closed. Furniture and fixtures. There is something missing. See here, credit side, it is 295 plus 17 plus 35. 3 lakh 47. Debit side, it's only 198. How? They purchased some asset. And we are assuming that they paid it in cash. Sir, why don't we assume that they paid it on it's on credit? If it is on credit, you would have got liability, no, for assets. Have they given in the balance sheet? No, it is paid in cash. How much? 1 lakh 49. Balancing figure. You tell me, operating, investing, or financing? Investing. Inflow, outflow. Outflow. 1 lakh 49,000 will be investing outflow. Let me write here. Purchase of furniture and fixture minus 1 lakh 49. Did everybody get this? Is there any other ledger that's incomplete and not closed? Everything's done. I hope you people understood. If you do have any doubt, watch the deferred tax liability part once again slowly at 0.5x speed so that you get it. Now take the total 30 plus 35 minus 8 plus 15 plus 15 minus 10 minus 15. This is cash flow from operating activities before tax. This is cash flow from operating activities before tax. Tax is how much? Minus 4. Minus 4. Cash flow from operating activities 23. Done with operating activities. Now see investing. 17 and minus 1 lakh 49. Can I say 1 lakh 33 minus outflow of 1 lakh 32? Sorry. 1 lakh 32 outflow. Check it out. Financing 2 lakh positive. Take your calculator. Do 23,000 plus, sorry, minus 1 lakh 32 plus 2 lakh plus 1 lakh 85,000. 2 lakh 76,000 is the closing cash and cash equivalent. Got this? 7 marks.